The Liberal government says it wants to increase competition in financial services, although no concrete legislation has been proposed yet. What does this mean potentially for the credit unions? We're joined by Michael Hatch, Vice President of Government Relations for the Canadian Credit Union Association. Thank you very much indeed for joining us, Michael. Really appreciate it. Of course, you're going to give your industry's viewpoint, or tend to. Well, that's what you're here for. But tell us, what is the problem with competition? Is there a problem with competition in financial services in Canada?
Yeah, well, look, I wouldn't think anybody would accuse financial services in Canada of suffering from a surplus of competition. Everybody knows the big players and the dominance of those players. Credit unions are some of the only competition that exists in the marketplace. So, we've been pushing the federal government to bring in measures, and these are technical amendments really at the end of the day, but to increase competition, to allow more credit unions to join the federal market, the federal space, as they are currently, for the most part, confined to their respective provinces. And the budget bill that we saw last night is a first step in terms of starting that process, and we're very encouraged by it.
So credit unions can, I understand, get a banking license, but it's a long Byzantine process.
Yeah, that's right. So, for the last decade or a little more, there's been an option for provincially regulated credit unions who are, for the most part, confined to their respective provinces to, quote unquote, go federal, join the national market, compete and grow and seek deposits and members outside of their home province. Now, that legislative or regulatory option has existed since, I think, 2011 or 2012. But very few have gone down that road just because, as you say, it is a lengthy process. It is time consuming. It's very expensive in terms of, financial and human resources. So, we've seen not a large number of institutions take that option. So I think the thinking behind that option when it was first brought in was to increase competition, was to increase the number of institutions operating at the national level, which is, of course, a great idea. But now what we see is finally a federal government and a regulator, frankly, willing to look at this process, make it a little bit simpler, not to lower the standards necessary to join the federal market. Of course, OSFI, the national banking regulator, is a world-class regulator and a world-class prudential standard setter. We just want to make the process a little bit more attractive so that more credit unions can join the national market, can go federal, can seek deposits and members, and compete at the national level, which ultimately will be good for competition and good for consumers across the country.
So, you look at the big credit unions, Meridian, et cetera, to name one in Ontario, they have ATMs, they have branches, they look like banks.
Of course, these are full-service financial institutions that have been operating in their communities and their provinces for decades, in some cases over a century, right? So this is a very well-established market. Again, we do provide some of the only competition that exists to the big 5 or 6 financial institutions in this country that everybody is aware of. And again, competition is not something that would necessarily characterize this sector in terms of its history over the last number of decades. And the same is true in other sectors of the economy. And now we have a government that's focused on that. Of course, cost of living is the number one political issue facing Canadians right now. There's very few direct sort of levers that a government can pull to lower prices. There's no magic wand that exists here to lower the price, of bread and eggs at the grocery store or financial services or air travel or whatever the case may be. But competition in any and all of these sectors, if you increase competition, that will have a downward impact on prices and inflation over time. And that's one, frankly, no-cost option that's available to the government, and we're excited and encouraged to see that they're pursuing it.
The Competition Bureau certainly seems to be in your camp. I'm looking at a submission from that watchdog last year, and they say that there's an urgent need to ensure robust competition. Concerns about weak Canadian productivity have brought out a renewed focus on the critical role of competition. And they say that borrowing costs have rapidly increased to their highest levels in a generation. Now, I'm not sure if they're just getting at interest rates or the fees or the spread maybe the banks are charging. I mean, certainly it seems plausible. Just the more players, the merrier in any market.
Yeah, of course. And that story is partially interest rate. Obviously, we're coming out of a historically low interest
Yes.
rate environment over the last number of decades, which, turns out perhaps was a bit of an anomaly. But there's other components that go into the overall cost of borrowing. Now, the Competition Bureau is a very important player at the national level. Their mandate is, of course, as the name would imply, competition. And their part of their role is to look at mergers and consolidation in our sector and in others. And there's an important distinction that I think your viewers should be aware of. Consolidation, mergers in most sectors, it can be associated with a reduction in consumer choice and a reduction in competition, and that's intuitively, it makes sense. If there's fewer players as a result of consolidation, it's intuitive that there's therefore going to be less competition. I would argue that the opposite is true in our sector, whereas credit unions, we have to be able to continue to consolidate, to continue to gain the scale that we need in order to continue competing with the massive federally regulated financial institutions. So whereas mergers and consolidation can often be seen as associated with a reduction in consumer choice, the opposite is true in our case. And that is a case that we're making not only with the government, but also with the Competition Bureau as they examine mergers and consolidation in the credit union sector, which is a trend that has been ongoing now for decades and will continue to do so as our members and credit unions across the country seek to gain the scale that they need to continue to compete.
We're tight for time. Do credit unions lend to corporations, small businesses much?
Absolutely. Collectively, the credit union sector is the biggest lender to small business across Canada. If you're a barbershop or a laundromat or a restaurant in, Swift Current, Saskatchewan, or Sydney, Cape Breton, and you're dealing with a credit union, you don't have to wait for a lending decision to come down from HQ on Bay Street in Toronto. We have that local knowledge, and of course, small business in particular are deeply rooted in their communities across this country. It's a hugely important part of our economy, and credit unions are collectively the number one financer and lender to small business across Canada.
Is there any sense that you get, and of course you speak for the industry, but that small businesses find it easier to get loans from big bank, or from you guys, from your credit unions, than they would from the big banks? I mean, I've heard, for example, big banks, they want your house, they want security of your house before they'll advance any money to you.
Well, look, I can't speak for those institutions. I speak for the credit unions. And again, there's a reason I think that we are the most important lender to small business across Canada. And that is that local knowledge, that local connection, the fact that, again, we have been in those communities for decades, if not over a century. There's hundreds of communities across Canada. 400 plus communities across Canada where a credit union is the only physical presence in the community. So, for all of those reasons and more, we punch above our weight in terms of small business lending. And, I can't speak for the large banks, of course, but it's a hugely important component of our membership base.
That's a fascinating story. Michael, thank you very much indeed. Michael Hatch is Vice President of Government Relations for the Canadian Credit Union Association.